Welcome to This Week in the Index. I'm your host, Grayson Brulte. Overall, it was a good week in the markets for the week of July 24th, as the Road to Autonomy Index returned 1.82%. The S&P 500 returned 0.81%. The Nasdaq 100 returned 2.33%. The Road to Autonomy Index outperformed the S&P 500 by 1.01%. The Road to Autonomy Index underperformed the Nasdaq 100 by 0.51%. The top performing stocks in the Road to Autonomy Index this week were Alphabet, which returned 10.46%, Ryder, which returned 10.15%, Micron, which returned 8.45%. While these stocks performed well, they are just 3 of the 38 publicly traded companies that are components of the Road to Autonomy Index. News and opinion drives the market, and this week in autonomy, there were some developments. On Tuesday, July 25th, Alphabet, a Road to Autonomy Index component company, announced their Q2 2023 earnings. The earnings were strong as Alphabet reported revenue of $74.6 billion, up 7% year over year. Operating income of $21.8 billion, up 12% year over year, and earnings per share of $1.44, up 19% year over year. A few interesting points to note in Alphabet's earnings. Alphabet announced that Ruth Porat will be transitioning into the newly created role of President and Chief Investment Officer of Alphabet and Google on September 1st. As Barrons rightly pointed out in a July 26 article, Ms. Porat will be responsible for investments in Alphabet's Other Bets portfolio. Look for Ms. Porat to make significant changes to the way Other Bets is managed from a financial perspective. The seeds for this change of how things are going to be managed were being laid, as on the 2023 Q2 earnings call, Ms. Porat stated the following, end quote, "As to our other bets, for the second quarter, revenues were $285 million, and the operating loss was $813 million. The decrease in operating loss was primarily driven by a reduction in valuation-based compensation liabilities related to certain other bets," end quote. The loss in other bets was down from $1.34 billion in the second quarter of 2022, but still, it's a significant loss. One day after the earnings call, Ms. Porat's statement, Waymo publicly announced that they were shutting down their trucking efforts to focus primarily on Waymo One, their Robotaxi business. The rumors of Waymo shutting down their trucking business have been circling for roughly a year now and came true on July 26, 2023. There are a few interesting things to point out from this announcement. One, there is a clear indication that Ms. Porat is forcing financial discipline on Waymo, and that the financial discipline will only continue when she becomes President and Chief Investment Officer on September 1st. Two, was this an admission by Waymo to the fact that the universal driver did not work, it could not scale? It could be, as some of the engineers that worked on Waymo via their autonomous trucking business are now working on highway speed technology for Waymo One, their Robotaxi business. One day we'll find out as we watch Waymo's business evolve over the coming years. Was there such thing as the universal driver? We will see. As we watch Waymo's business evolve, Ms. Porat steps into her new role. We are going to keep an eye on licensing the Waymo driver. Licensing the Waymo driver would create a low-cost, scalable revenue stream for Waymo that investors would cheer. The bottom line is, change is coming to Waymo. It will be change that molds Waymo into a long-term, sustainable business with profitable revenue. And we'll have Ms. Porat to thank for that. By focusing on purely robotaxis, Waymo signaled to the market that GM, a Road to Autonomy Index component company's Cruise division, is a formidable threat. As Cruise continues to expand eastward after announcing the Miami expansion on July 19th and the Nashville expansion on July 27th, Cruise is scaling. This will put Cruise operations in 7 cities, with more cities to come, as Kyle Vogt, co-founder and CEO of Cruise, announced in a tweet on July 27th. Waymo, they're currently only operating and testing in 4 cities: Phoenix, San Francisco, Los Angeles, and Austin. If this were a baseball game, Cruise would be leading 7-4. Cruise is scaling from a technical perspective because of the structure of their ML models. Their ML models are adaptable and scalable. Outside of Cruise's technology, one has to give a lot of credit to their leadership team. The Cruise leadership team of Kyle, Gil West, Chief Operating Officer, Jeff Leach, Chief Legal Officer, and Bill Nash, Chief Financial Officer, have all done a fantastic job scaling the company. Gil was previously CEO of Delta Airlines, and by looking at the way that Cruise is scaling and their operations model, they have learned a lot from the airline industry. Thank you, Gil. One of the keys to scaling a robotaxi business is culture and management. You can have the most capital in the world, but without the right business model and management in place to execute on it, you fail. You will not scale. We have seen this time and time again in autonomy, and now the leaderboard, in my opinion, for the next 24 months for robotaxis has been set. The leaderboard is as follows, in my opinion. Tied for first place, Cruise and Waymo, followed in third by Motional, with Zoox and May Mobility drafting behind. Zoox is a company that has a bright future, but a future that is uncertain as Andy Jassy, CEO of Amazon, is on a cost-cutting mission. With Zoox currently employing 1,252 employees, according to LinkedIn data, it's costing Amazon roughly $313 million a year in salaries, with an average salary of $250,000 per employee. Could be higher, but that's a lot of money. This is not taking into account bonuses, stock option grants, or benefits. Bottom line, it's expensive to operate Zoox. And inside of Amazon, Zoox has the second largest employee pool in the Moonshots Projects division, behind Alexa, which has 2,500 employees. The hardware division under the Alexa team operates under Dave Limp. They had layoffs in January as part of Amazon's overall cost-cutting measures. Mr. Jassy reining in costs is the right thing to do, as the average interest rate on the U.S. credit card balances is 20.7% now because of the Fed rate hikes. This is the highest rate since 1994. The U.S. consumer is going to start to feel the pinch of escalating rates. Come October and November, when credit card bills come due from the U.S. consumers overspending on summer vacations to Europe, Amazon's U.S. sales are going to dip as consumers struggle to pay their credit card bills. Consumers are going to struggle come the fall and winter. As I have said before, something is going to break due to the high interest rate environment, and the U.S. consumer spending is going to hit a wall come the fall, as you can't fight the Fed. In Q2 2023, American Express increased their provisions for credit losses to $1.2 billion, compared with $410 million a year ago. The increase in provisions reflects the higher net write-offs. The U.S. consumer is starting to show cracks. This is all despite American Express stating that credit metrics remain strong in the current quarter. I'm uncertain about that statement, as Amex's core customer is starting to show strain under the high interest rate environment. With the average U.S. consumer and high net worth consumer both showing strain, the moves being made by both Alphabet and Amazon to cut costs are wise, extremely wise. As Alphabet and Amazon cut costs, Aurora, on the other hand, continues to raise capital, while one of their co-founders, Sterling Anderson, continues to sell stock through a 10b5 program. While legal, it has a terrible optics, as the founders of Aurora Innovation agreed to a 4-year stock lockup as part of the SPAC transaction with Reinvent Technology Partners Y. In the press release announcing the transaction, the following was stated about the SPAC, and quote, Reinvent believes in structuring its transactions to ensure long-term alignment with the companies in which it invests. Consistent with this approach, Reinvent and Aurora have agreed to hold a lockup on founder shares held by Reinvent's sponsor and its directors for up to 4 years. Certain major stockholders, key executives, which Sterling is, and board members of Aurora have agreed to a similar lockup on their shares and price-based vesting for Reinvent sponsor shares. End quote. The optics do not look good, as between June 8, 2023 and Wednesday, July 26, 2023, Mr. Anderson has sold 6.38 million shares, netting $17.16 million before taxes. It's been less than 2 years since Aurora de-SPACed. 2 years before the lockup schedule was due to end. Could this be part of an estate plan? Or is Mr. Anderson signaling to the market his departure from Aurora is near? I don't know. But what we do know, and what I can gather from the data, something is brewing. As things brew over at Aurora, the market continues to remain healthy despite all the macroeconomic headwinds. The seeds for autonomy becoming a big business are being planted today. We are at the dawn of the autonomy economy. In the future, autonomy will be one of the largest industries in the world. Autonomy is a business, and there is an index to track its performance. The autonomy economy is coming. Follow the Road to Autonomy Index, ticker Autonomy, on your favorite finance app. Again, the ticker is Autonomy, AUTONOMY. Be sure to join us again next Sunday for the latest installment of the Road to Autonomy's This Week in the Index. The future is bright, The future is autonomous. The future is business operations and planning.